Are you waiting for Calgary's market to heat back up in 2026? Well, January just sent a very clear message. Sales are down, inventory is climbing, and the biggest shift is happening in one specific part of the market: high density homes. Condos and townhomes are starting 2026 with more supply, less urgency, more negotiating room, while detached is still holding steady. So in today's monthly update, I'm going to break down the January 2026 numbers for Calgary, highlight the biggest changes you actually need to care about, then I'll explain what this means for buyers and sellers as we head towards the spring market. These January numbers are important because they show how the market is starting the year and they give us early signals for spring. So let's jump into it. Calgary started 2026 more balanced. In January, Calgary recorded 1,234 sales, which is down about 15% year over year. But the Calgary Real Estate Board notes it's still in line with typical January activity. At the same time, sellers brought on 2,785 new listings, which pushed the sales to new listings ratio down to 44%. Inventory rose to 4,391, and months of supply moved up to 3.56. That combination matters because it confirms that many buyers and sellers need to understand one thing. The market is no longer operating with the same urgency we saw in earlier years. And one key line from the report explains psychological shift early. Calgary Real Estate Board says buyers, especially in high-density homes, were more hesitant to return in January because increased supply choice has reduced that urgency. Now, it is very stable month to month, but still down year over year. And here's that pricing headline. The total residential benchmark price in Calgary is $554,400 in January. That's roughly down nearly 5% year over year. The Calgary Real Estate Board also points out something important. While the unadjusted numbers are down year over year, the seasonally adjusted trend suggests stability compared to the end of 2025. So what does that mean? We're not seeing a free-for-all. We're seeing a market that cooled in late 2025, and now it's starting in 2026 with more steady but selective conditions. The real story: conditions vary a lot by property type. This market is not moving as one, it's moving as 4 different markets. Calgary Real Estate Board is very clear that row homes and apartments are facing higher inventory compared to long-term trends. And that's why months of supply ranges from under 3 months in detached to around 5 months in apartments. So let's break this down properly. Detached homes still are the steadiest segment amongst everything. It is the most stable part of the market. In January, Calgary's detached homes had 657 sales. That's 1,243 new listings. An inventory of 1,753. Months of supply is at 2.67, keeping conditions relatively balanced for the detached segment. The benchmark price is $724,000, which is about 3.38% lower year over year. So what does this mean? Detached did not snap back upward, but it also hasn't weakened the way that high density segments have. Detached sellers need to price correctly, but if the home is clean, well positioned, and shows well, this segment is still moving. This is a big supply change, and prices are mostly holding. These are one of those that you have to watch very closely. It's a very important segment. Sales were 118, inventory rose to 418, and months of supply jumped to 3.54. That's a massive change compared to last year, and it lines up with buyers feeling less rushed. Benchmark price is $667,000. about 1.1% lower year over year. Here's the key. Prices aren't collapsing here, but supply is rising. And that creates more negotiating power for buyers and more pressure on sellers to be sharp on pricing and presentation. Row homes are clearly softer than detached and semi-detached. Sales were 186, new listings were 504, inventory climbed to 785, and months of supply rose to 4.22. The benchmark price is $420,800, down 5.3% year over year. This is where we're seeing more buyer leverage really show up. If you're a buyer looking for value and you don't need a detached home, row homes are increasingly a segment that you have negotiating power in, especially if a listing has been sitting. Now, apartments. This is where supply pressure is the headline. This is the biggest story of January. Apartment sales were 273. New listings were 787. And inventory rose to 1,435, which Krebs notes is the highest level ever reported in January. Months of supply was 5.6, and the benchmark price is $301,200, down 7.7% year over year. That is very much a buyer's market setup. If you're selling a condo in 2026, you need to understand you're competing harder. You need stronger pricing discipline, and you need marketing that makes yours stand out. If you're a buyer, condos are where the negotiating power is the strongest right now. Now, let's talk about how long it's taking. Across Calgary overall, days on market have increased to 53 in January. That is up from 41 last January. Sales to list ratio eased to 97.68% overall. Those two stats matter because they signal the same thing. Buyers are not racing the clock, and sellers are not getting rewarded for testing the market. Now, this very much matters as well. Which district do we see a lot of this happening in? Where prices are stronger and where they are weaker. Here's another major update that matters for that pricing strategy. The Calgary Real Estate Board notes that detached year-over-year declines range from less than 1% in the West District to over 6% in the Northeast, and that the pullback was influenced by city center and Northwest shifts. So what did I just say there? Your neighborhood and property type combo very much matter, more than ever. You can't price based on headlines. You have to price based on your specific pocket. And what's even happening outside of Calgary? Now let's look at the surrounding markets, because these matter for move-up buyers and people relocating. In the Calgary regional stats for January 2026, here is a few notable standouts. Cochrane saw new listings hit the highest level ever reported in January, with months of supply around 5. And the benchmark price is $550,800, nearly 2% lower than December and the start of last year, according to the summary. Okotoks is the opposite story. Low inventory and 2 months of supply, and the benchmark price is $599,500, which is 2% lower year over year. So what does this mean for buyers right now? If you're buying in 2026, this market is giving you something you didn't have in peak years: time and options. Inventory is higher, days on market are longer, and the high density segments are clearly in a buyer advantage position. The move in months of supply, especially condos and new homes, means you should be negotiating with confidence, but still intelligently. The best buyers in 2026 will do 3 things. They'll shop based on comparables, not emotions. They'll use days on market and supply conditions as leverage. And they'll focus on long-term value, not trying to time the exact bottom. So what does this mean for sellers right now? If you're selling in 2026, here's the reality. You can't list like it's 2022 or early 2024. You need accuracy and you need execution. Pricing has to be analytical, not emotional, because buyers have choice, especially if you're selling a row home or an apartment. And marketing matters more and more than ever. When supply is up and buyers are selective, your home has to win the comparison game online first, then win it again in person. If you're a seller, your two biggest risks are overpricing and chasing a market that doesn't exist, or undermarketing and blending in with the rest of the inventory. So what to watch as we head into spring 2026? January is always a set the table month. The big things I'm watching going into the spring are whether inventory keeps building at this pace, whether high density demand returns or stays hesitant, and whether detached remains stable while condos and row homes continue to adjust. If new listings continue to outpace sales, especially in condos and townhomes, buyers will keep leverage through spring. But if demand returns sharply and inventory levels stop rising, spring could tighten faster than people expect. Right now, the market is balanced overall, but it's leaning buyer-friendly in the high-density areas. Now, I think something is very important here. There's a lot of news and a lot of headlines out there highlighting market is going down, things are crashing, but we just broke down that it is very segment dependent. And you have to look what you have, and you have to get the right information. Stop just going off what your friend's uncle said or what the headlines are saying. You need to get the best and most accurate information for you and your situation. So if you want a breakdown of your exact property type and neighborhood, or you want to know what your home would realistically sell for in this market, reach out anytime. The strategy in 2026 is simple. Use real data, price it right, and don't guess. As always, click the link in the bio, like, subscribe. Thank you for watching. See you on the next video.